All right, goals, pull. Nice reversal yesterday on finger. FNGR following through this morning. I got that. Yes, yesterday. Yes, it was yesterday. Anybody else get that? FNGR. If that is indeed the bottom entry day, then that's a great spot to have gotten it. Last time we did get, I don't know that we got that. Did we get that? Yeah. Oh, actually, we did. Yeah. Finger stop 250, 29. Stop what? 250. I mean, it was on June 29th, and we got it at $3, and it proceeded to go all the way to $7 over 100% gains. FNGR. Any of you remember that? But you made money on that. BMI. And we're going to attempt to make money on it again. This would have been a breakout entry, I believe. Let's see. Trades. 21st. That would have been Friday. So that would have been this first day here, I believe. Let's see. BMI. Basically back to where we got it right now. Yeah, and slightly down. All right, that was a breakout entry. Higher risk, smaller size, higher risk. So smaller size. Battle we got in yesterday. Up and down. That's considered a pullback entry and a very high ADR. No, it's not a very high ADR. Prospects looking great on that one. Pullback entry. AUR. Back entry. That one really performed. AUID. Oops, hang on. Let's go back to AUR. And since I have those things on there, do that. 289.9. So in other words, 290. Okay. And then what is it? Not battle. AUID. Pullback entry, pullback bounce entry. Didn't really follow through very good. It's on the chopping block. And AAOI. D. What? AUID. And AAOI. I love this one. I hope that we get a good entry on it. We certainly did really well on the previous trade. 8.6 yesterday. And move that to... Love this spot on this one. This one I took larger size on because of where it's sitting, but multiply that by the market positioning and still can't go balls to the wall on it. Okay, so that's everything. Let's go look at the Qs now. The dollar is perhaps causing the market to fall right now. What happened here? What time is it? Not sure what that's about. The dollar weakening a little bit just right now, which could cause the business cycle stocks, Qs, growth stocks to pull back a little bit. And but in any event, we have seemingly found some support yesterday, around 375 on the Qs, around this level here, which is around the top of this last base, 372. We can still crunch into it some more, crunch into it. And I probably expect that on, I believe it is tomorrow when the Fed releases their interest rate decision, up or down. We're still probably going to crunch down a little bit, volatility wise. And then if it wants to go up, that could take some days to hash out. Everybody's got a different opinion on that. Can't ignore is the economy. So, the green line, the trend line, the average, we're going up, whether or not in the short term you squish down or pop up, fight it out. However you fight it out, we have global warming on the economy. The economy is going up. So, but that does remind me that we have several important reports key this week. I don't think I talked about it in pre-market yesterday, but I posted about it. So, but let me just let you know what those are really quickly. We've got the home price index came in just now, 9 o'clock this morning. And consumer confidence comes in at 10. But tomorrow is the big day. We'll have some new home sales data in the morning. But the big day is 2 p.m. tomorrow. We're going to have the Fed's interest rate decision. And there seems to be a bit of a 50-50 fight about whether or not they might raise the rates a quarter point, 25 basis points, a quarter point, from 0.5 to, or 5, what is it at right now? I got to just make sure that I'm right on this number. I believe we're at 5.25 right now, I believe, and then that would move it up to 5.5. But there's some speculation to that they might not. And then there's some speculation to that they might go a half basis point. So you have about a 50-50 on it being raised. But the market, of course, is pricing this all in. And then once the cat's out of the bag, that'll release a lot of volatility on the market, and the VIX will go down unless it's a surprise negative. Then the VIX will rise. But as it is right now, it's pricing in the probability spectrum of where that will be. Let's see here. And then Thursday we have a GDP growth rate numbers coming in. GDP, that's pretty huge. Seems kind of backward that they do it that way, but perhaps the Fed already gets the GDP numbers ahead of time. Could look that up to find that out, what they know before we know it. Obviously a lot. But you would think you would want the GDP numbers before you decide what to do on the interest rate. And that's, I don't know, they probably do that to stop whiplash pandemonium, which definitely could happen. All right, so then the day today, that's what's going on as far as economic events this week. You got to watch out for the potholes in the road ahead. But we are up in pre-market, and we did find support yesterday. Much more support yesterday than in prior days, like 3 times as much. So that's interesting, and it could still be obliterated by just simply not enough positive outlook, and we could get continued sell-off today. Probably going to be dojiing out because Wednesday is going to be the Fed decision, and that's huge. So probably the best idea for you today is to get in whatever signaling to get in, because those are cars getting into pole position, but to absolutely be getting into shorts of an equal amount in the other direction, so that once the Kraken is released, and depending on whichever way it swims, you'll be delta neutral hedged. So today I'll probably be hunting all day for lots and lots of shorts, because I probably have to cut a few this morning, probably. But I have 63 neutral negative deltas, which is good in my portfolio. I have 1, 2, 3, 4, 5, 6, 7, like almost 10 shorts, and then I have something like 30 longs, but that adds up to about 250 long deltas, and I have 60 short. So I need 190 deltas short to compensate, or I need to sell stuff, and I probably will sell some things. But it's hard, when you're getting signals and they're tasty signals. They exist for a reason. It's because they're worth taking, and they've gotten to that position, and it's taken them the entire bear market, and to turn around their company and get the price where it is, and into position and ready to pop. And it can be a pain in the neck when you don't have enough money, but it's all proportional. When the market is sitting pretty, which is a pullback, by the way, not when it's zooming, and a stock is sitting pretty, when it's all fully set up and it's pulled back as well, you're gonna any signal is gonna say, hey, you need to get in big because of the risk reward on this, and because you'll be getting in bigger, you'll only be able to get 5 or 10 positions into your portfolio, even if fully loaded, maxed, margined, etc. 10, 12, probably maximum 15 positions, maybe 12, probably 10. But when the market is a little bit at a weaker, riskier spot, if there is anything signaling, hopefully you've got your risk down to where you could get into 50, 60, 70 positions, and I don't necessarily recommend that for the faint at heart, but the point there being, just think about that size differential. You've cut your portfolio into 70 parts whenever risk is high, and then you've cut your portfolio into like 10 parts whenever risk is low. So it's a 7-to-1 differential there between risk points of getting into signals. So the real problem becomes when risk gets low. Isn't that interesting? So when the risk is high, you're able to get into everything that signals. When risk, because they're small and you have plenty of money for it. But when risk is when risk is low, now you have to go big, right? And now you have to be so judicious. And that's when that's when the best traders shine, is when the risk is low. And it doesn't look like, anything going on, and you get in at the right point and at the right size. And then if you've timed it right, then if the market takes off and the stocks take off, now you're getting a much larger percentage gain per move in your portfolio, which is what you wait and wait and wait for. The last time we had an opportunity like that was back here. The reclaim over here on June 27th. So this was turned out to be a nice long base, and then you had another potential entry on July 11th. Both those were the key entry areas, and some stocks would have probably even signaled on July 10th and the day before on June 26th. And then you got what? 6 days out of it, and then it was over. And that was even record, So, but if you're in another stock that was already zooming and already running during breaking and running during the pullback of the market, what can it do when the market breaks? Even more. And so, like something like AAOI did 15 days in a row up. And by the way, we just got entry on that yesterday. All right, let's move into the intraday picks here. Something AURC warrants. So maybe AURC is popping. Let me see. Yeah, AURC is up 60% or so. And then the warrants. This looks like a SPAC that SPAC'd yesterday. 125. That's today. So it actually started trading pre-market, and looks like it is pretty hot. AURC. That just popped on my radar. ELBM, we're watching that. I think it's a buyout though or something. Let's see. Up 70% today. Cobalt supply agreement. With LG Energy Solution. 19,000 tons of cobalt over a 5-year period. There goes AURC with a nice little green candle break over the 10 moving average off of VWAP. For your intraday day traders, there's potential opportunity there on AURC. This is the first day trading, so we have no idea what to expect. So expect the highest levels of risk there. Boom, it just hit 15 now. AURC. And the market's going to be opening in 4 minutes. We're also looking at ELBM. I'm watching Yosh and PWM, and Spotify had negative reaction to its earnings. And it has pulled back significantly. Where's the numbers here? It is down 7%. Not cumulative. Let me see. 152.30 divided by 163.72. Yeah, 7%. So not huge, but it could be worth a short on Spotify off the open if it continues bearish. That's something I'm going to get off the open. Just figuring out size on that, right? Okay. All right, I got my trigger finger on that. Shoot off an order at minute 2 on Spotify for a short, easy to borrow at the moment. We'll see if that comes short style restricted. I don't think so. Anything that's that investor grade, that was a pretty big one, Spotify. They have so many shares in the share lending program that typically it's easy to borrow. All right, any questions or comments? Here we go. We'll be trading in about 2 minutes. The market will open. Pre-market hot list showing Talk Workspace, which we're already in, is up more. It's up another 10%. putting us at almost 40% gains now. NEO is up pre-market. Yeah, I already wanted to be in that one. That's too late. It's taken off. SciFi up pre-market. This, if it, this should be on watch because this could be a reversal entry on SciFi, SIFY, and then D-Dog. I heard it popped pre-market. Yeah, but D-Dog was an entry yesterday. Did anybody get that? I don't know if I signaled that. However, that was an entry. See the little blue candle right there? D-Dog yesterday was an entry, and is it up? It is up 4% today. The ADR on that 3.6%. You know, don't freak out. All right, 30 seconds until the market opens. Okay, 15 seconds until the first minute's up. Modify. Let's see if I'm going to short it. Yep, I'm in. The second minute broke the low. I'm in for now. Babysitting it. NRGV doesn't seem to be following through very well. Getting a little bounce at the moment. The market is going green. I'm going to dump this RYA short. Upstart is doing something. Let's see. Yeah, Upstart having a nice continuation. When did we get in that? Or we've been in that. Okay, hang on one sec, because this could be a add-on. This is an add-on on Upstart. You don't want your cost average to get higher than 52.20 though. My cost average is 37, so I'm sitting in a great spot. I'm just going to go ahead and double up on Upstart. and then you have to babysit your add-on. So if that doesn't follow through, you got to take it back. What did I do? Oh, I got to sell something to free up some cash. I'm fully loaded. So I might as well take this moment to sell NRGV, which was not doing too well. I wanted to take a look at it at least. To see how that's going to go. Let's see if there's something else I can get. Taste giving back all of its gains that we were in on, and that is definite dump. At break even. Anything that's went up, anything that's gone up and you've had profits on for more than a day for sure, and then it comes back to your break even on you, don't let that go negative. Exit. Never let a gain turn into a loss. Rule number 72. All right, let's see if that was enough for me to double up. I don't think so. Just possibly just short of it. Okay, good. So doubled up on upstart and moving that into swings, regular old swings. Well, it's a pullback entry. What was the other one we doubled up on the other day? We added to Alto. We're up 18% on Alto, a stock in which we did add on the other day. I don't think it was a runner though. Might have been, but then we got an add-on signal. Oh, okay, that makes sense. All right. Spotify fighting the open. I'm shorting that. Not that I think that it's going to go down. Just I think that if it does, then that's the trade. That's the way it is. But if we do break the upside of this 5-minute area here, I'll cut that short. And then potentially get back in if it breaks down on the day. ELBM, we're definitely getting a beautiful move on ELBM from 215 all the way to 240 now. And that one, AURC, that has gone from like $15 or whatever to $16.70 already and might be halted. AURC. Market itself is performing well this morning, turning yesterday's doji into what appears to be an entry day, not necessarily on the market, but outlook-wise. It has the weather forecasting. Seem to be giving back a lot on BBIG. Oh, not really. All right, it's just a gap down open there, and it seems to also be finding support. So it is what it is. That's just standard issue fluctuation. APLD continuing from our entry yesterday. Nice. So that's a wonderful lift off on APLD. See where it ends up in a couple of days. We've been looking for an entry on APLD. I think we've attempted a few and either got out at break even, a small or decent profit, or a small loss. But I don't think anything stopped out on us. So it's been profitable to step up to the plate on APLD. It's been not a losing proposition to step up to the plate on APLD. And now we're in and we're up 13%. ABCM reclaiming some of the pullback that it went through yesterday. We're back at entry now. Let's see, ABCM. Yeah, we're down a smidge, but we're back right around our entry. That's great. Similarly on AUID, which is on the chopping block today, NRGV is coming up a tiny bit from the dip that it just went through. Do you need me to look at something? KSCP doesn't seem to be at the follow through we were looking forward to. Might come down to the 200 here, $1.41. Be on your toes if it goes below that. We don't want it to go below $1.40. All right, let's take a look at the hot list. And we can shoot right into the signals, actually. Since we're still at the open, PRFX. Can't really even read this one. Let me just put it over here so I can read it better. Just so red. FRLN. Look at those topping tail, those rejection wicks. GREE. This could be good. This could be very good. The last time GREE put out one of these signals, it went up 218% in like a week and a half, 2 weeks, 2 weeks, 9 bars. That's an entry on GREE. Stop 650. I got to free up. I got to get out of something because I got to free up some cash here to be able to get that. I'll let go of anything like a battle. Lanza. Anyway, GREE is an entry. Stop whatever I just said, 650 or 450, whatever that number was. In the meantime, I'm looking to try and get out of something. Getting out of, perhaps, except for NRGV. It's a good prospect, though. Can be such a tough spot. Spotify now moving down off of that low of the day, new low on Spotify. So the short on Spotify is working. It's magic. Looking for anything to cut here. It doesn't really reclaim very much money, but I'll get rid of my XLP. Consumer staples. Macro hedge. Tell me, come on. Anyway, let's go back here to which one was it that we wanted to get in? GREE. Did anybody get in it? GREE. So GREE looks like a good entry. Stop 650. I wish I could get in with you guys. Good luck. And agree HCTI. Derm. Wave. No. ICAD. High tight flag. Not putting in a signal today though. Might go lower. BDTX. I think someone failed out or something. Yeah. No. Oh, good. I got my liquidity back here. No, what was that? Yeah. I have less available funds now. All right, let's figure out how many shares I would have got of GREE. 38 cents of risk, roughly 0.4, 250 shares. 250 shares at the lowest risk levels. And here I could probably go actually 0.5 R, which would be 5 times that, or 1,250 shares. Times 688 is $8,600. Wow, a nice core position could be gotten on GREE. But no, I only have $800 free at the moment. Let's keep selling stuff. NRGV can take me out. Free up that money if it doesn't look good. Let's see. Oh no, it's bouncing around this area. Take me out yet. We had some gains on KSCP, almost entirely eliminated now. But it's not about the gains. We're still above our entry. But yeah, this is the one that is now halfway to its trek to the 200. And we hope to see it bounce at 140. If it breaks through 140, I'll have to liquidate that one. Watch list just keeps disappearing, so I'm gonna have to I am gonna have to keep it over here. It's hard to read. ARBK. No. Wolf, back on the list. Wolf, that is an entry, very high tight flag. Entry on Wolf 367, 340, 344 risk. So it's like 25 cents of risk on Wolf. It sucks to be missing all these signals. Make sure you babysit it all day. Early signals have to be babysitted all day. Don't keep anything that goes against you. Get back in at the end of the day if it confirms. Wolf, WLF, WULF, 344 stop, 25 cents of risk, Wolf. And it's a very high tight flag. You don't get them this high, which is 125%, and you don't get them this tight, which is only an 18% pullback on a 125% flag. That's pretty damn positive. So WLF signaling today. You may even want to stop down to the bottom of the flag, which is 320, and if so, that'd be 45 cents, almost 50 cents of risk. WULF. You hear me saying that stuff, but does everybody in the group follow what I'm saying when I say that about the risk and the size and the considerations and the stop and all that? Does everybody get that? I mean, does anybody like sort of hear that stuff and go like, no, whatever, just let me know when you get into whatever it is and I'll just buy a bunch? Or does everybody in here understand? Is anybody still behind the curve on there? Because let me know, because that way I know you're the one that every now and then I need to show you something, No, last time it signaled it popped and failed. An epic failure. But right now what I'm doing is I'm going through all the high growth signals, pullback signals. Okay, what's this next one? Cannot read that. IMUX. I am your ex, bitch. SMX BMI. Yeah, we're in that. What is that? We're in a BMI swing. We're already in. We're already in BMI from yesterday, I think. 21 since Friday. BMI is just doing fine. You think maybe I could cut that, or why are you asking about? Okay, BMI is doing fine. SMI, SMX. Are you serious? This one, Security Matters Public Limited. What about it? Hell no. The hell? What about that one? What are you seeing? Double vision? BGY. Ooh, very nice. Bounce off of the 10. I'd go for an entry on that, but you want to put your stop at 185. PGY, stop 185. Okay, so far we've had what? GREE with a stop at what? 650 was it? And then what was the one just before this one? Wolf. And there might have been another one, right? Wolf with the stop. I forget where. Dollar for something 45. And then now we're talking PGY. So I'm going to put these. I'm going to list these. PGY with a stop at $1.85. And then what was the Wolf? Was it Wolf? And there was one before Wolf. Does anybody remember? Or did you get it? I think it's probably prudent to put your stop at 320 on Wolf. So that's you got the wrong one. Okay. A BLND, like blind? Blend. Oh, like blend. Okay. Here. 56% in 13 bars. That's very good. That's like what, 3% per day? And signaling an entry right now. Stop at 120. BLND stop 120. I don't have the money right now, but I'm looking forward to cutting something. Yeah, it's not happening on NRGV. I'm going to take all that money back and see if I can get some of those other ones. Well, one of my best prospects probably was it Gree? Let's see. 216%. Jesus. All right, yeah, we 686. Stop 650. Right, 40 cents a risk, 250 shares. Oh, this is the one I was trying to get 1,250 on, right? The spot here. Super discount that, but it is on the back. So we're talking. It looks great. Healthy and long enough of a base yet. So I put that at 0.5. So to get about a quarter position, quarter R. $400 shares. Agree. So, yeah, market putting in a trend continuation candle over red with the soft candle yesterday. And then tomorrow at 2 p.m., you've got Fed interest rate decision. So I'm going to have to work the rest of my day on trimming, cutting, freeing up cash, shorting, delta neutral, hedging my portfolio as much as possible, because then tomorrow I'd like to do that even more. So 2 days in advance. And then when the Fed releases their decision, I'll be all set up to make money either way it goes. Okay, we're 5 minutes at the top of the hour. This is usually where the market puts in a short term, a medium term, long term, an intraday level. Later this week, we've got Meta and Google Alphabet. Is that right, Carl? Yeah. So I'll make sure to get any of those Lotto's picks out at the end of the day. I have something moving strongly in my direction right now, and I'm not sure where it's coming from. The whole market. I think it might be APLD. But check this out. I did this. It doesn't include all my positions right now. But I put every position in Trading View, and then I'm able to see on a moment-to-moment basis where is a move in my portfolio coming from. So like here, it's possibly this one, VRM. I don't think I even have that anymore. See, so I have to update my holdings. Oh, I do have that. Yeah, so that could be where some of that's coming from. And then also, yeah, Upstart actually is moving. And we doubled up on that today. Where is it? Didn't we double up on that? Yeah, I think so. Yeah, that could be where some of it's coming from. No, I'm getting a strong move from somewhere else. What is it? Exactly why you need all your tickers in there. BKKT, I do have that. UPST, I do have that. BBIG, I do have that. NVDL, I don't think I have NVIDIA. Oh, no, I do. Okay. HUT, I don't think I have HUT anymore. No. So HUT is this pink one. Delete. Now I need to add APLD, I think, to all this mess. APLD. So you just click add with the plus sign. You don't change the ticker in this case. You're adding a symbol to the chart. And then boom, it puts it. And you can see APLD is one of my best performers on the day since the open. Yesterday's close, you just back up the screen like that. And now you can see from yesterday's close, like right about there, who's doing the best. APLD, who's doing the worst. BBIG. And I don't have TWAC anymore. So that's pretty cool. Trading View. You just got to click the plus button here to add all your symbols. And then you'd want to put it in a line chart like I have it. And it automatically rainbow colors everything for you. Randomly picks different colors so you can see better. Imagine if they were all white. Oh, that would take a lot of extra work and not be worth it, I'll tell you that. I'm still getting some strong moves somewhere, and I don't know what it is. I don't think it's fully coming from APLD. No, I don't know what it is. But let me keep going through these so and then I will know. OSTK, I still have that. Yep. Vera. I do not still have Vera. So that's one I can go. Okay, it's the purple one here. XLU, I do still have XLU, and that's doing. And we just talked about AFRM. Yeah, I still have that. XLV? No, I sold that yesterday. AI, Yes, I still do have that. Alto, we still got that for sure. CBay, got it. Taste, we got rid of that a little bit ago. Taste, where are you? Goal. Oh, APLD is really making strides. I think that could be where it's coming from. CBay, come on, where the hell's Taste? There you go, and then just click delete. Click it and delete. Taste, I don't. Wait a minute, why did I delete Taste? Oh yeah, because I just sold it today. Inside the mind of Evan Evans. Okay. Goal, CBay, Workspace, got those. AMRX. Yep, still got that. Forge, FRGE. I think I do have that. And NGM. I think I'm short that. What? Short and long? That'd be hilarious. Shouldn't be there. Because I'm short that, and that's certainly working. I'm not sure if you can add a negative symbol. Let me see. Negative NGM. No, it doesn't let you do that. That'd be nice, though. Because then I can put my shorts on the same page and see gains, how much they're up or down in comparison. Because a down move is a positive move. Let's see. I need to add, okay, APLD, ABCM, and AUD. CM. Okay. AUID. Bit of maintenance, but I mean, you know, it helps you see where everything's moving. FNGR. Kind of keep track. So obviously APLD is just going ape shit right now. Let's go over to it. Nice. Like I said, this is one that we really wanted to be in for so long. It moved 200% in 8 days prior to this long base, and it's just had this beautiful, long, healthy base, and you just want to do everything you can to get in at the bottom of that base so you're at the lowest risk possible. And now it's very much following through, and that's where it's just getting started. You know, then it's going to break out, and all the breakout traders are going to jump on, and then it's going to go on a FOMO run if that follows through before the next base level, and we could be looking at APLD being at $16 in a month. And here we are with our seeds planted down in the $8 range. It's nice, good place to be sitting. Pretty. AAOI, let's see. I think I already cut it. Oh no, it's right in the middle there. Okay. It hasn't followed through like we hoped, but and so our timing is off. We know that. So it is something that's up for retiming, but it's also not pulled back very much from into yesterday's move. Not terribly. So yeah, babysit it. Don't be afraid of it. The AAOI, it could literally start to just put in higher lows. Next day, tomorrow, it could put in, a day up here. Can you see my AAOI chart? Fucking A. Let's see. Swear to God, if I had Tourette's, man, I probably have micro Tourette's. Not really. Not really, to be fair and honest. But anyway, what I'm saying is that tomorrow, maybe it puts in a day like this. Even if it didn't even go over today's high, it could put in something like this tomorrow. Inside candle. Inside candle will be progress, and then maybe a little bit higher the next day. That's all progress, even though it's not following through. The consumer confidence report is the highest in 2 years. Wow, that's fantastic and excellent for revenue and demand side of the business cycle. But causes inflation. So It's a double-edged sword. Anyway, yeah, you see it, Randy? Yeah. So that's why you'd stay in. You're not thinking ahead. You're way too defensive in intraday on these. When you become a swing trader, your stop is down here, and that doesn't mean let it go to the stop for sure. But just babysitting it day by day, you have to sort of take it all into context and go, is this really bad or is it not? And your stop that you've really risked your whole bet to is your entire range of leeway that you give yourself to just consciously think about it each and every day. It continues to make progress. So yeah, maybe yesterday wasn't the perfectly timed entry, but imagine if it did what I just said. Imagine if it did what I just said. How on earth are you getting it today at the bottom? What signal is that? Right? Right? So that makes yesterday the correct entry. So you don't want to ruin your best entry. So you kind of got to think ahead and then think backward. A lot. Yeah. I mean, some of the best decisions require some real good damn thinking, right? Otherwise, you couldn't go back and go, no, I mean, I considered everything. A good decision isn't one that's like everything's so easy and then you're like, hell yeah. I mean, yeah, I guess it's a good decision, but you didn't do anything. There was very little decision-making intelligence. Decision-making IQ, DMIQ. I love that. That's I just coined that fucker. Putting that on a notepad. DMIQ. That's going into my book. Decision-making IQ. And by the way, yeah, I know we're broadcasting out on many things and I can't say certain words, but I can say pineapple. But by the way, pineapples don't make a lot of money in the stock market. It's just nobody in the end, for moments, yes, but in the end, nobody really ever gets lucky on the stock market. Think about that for a minute. Nobody gets lucky on the stock market. And it comes down to your decision-making intelligence, your DMIQ. Your damn IQ. So you could be as ignorant and naive about all this, and you might have some short-term luck, but that will be what causes you to give it all back later, your short-term luck, because you won't. If it wasn't because you were intelligent, and it was because you got lucky, then you don't have the intelligence to know when to stop. And in that case, you are going to give it back some point in your lifetime. Whether it's you're going to get hit by a fucking bus, like a pineapple, fucking coconuts and pineapples splattered all over the front of the bus, or you're going to just get hit by reality at a certain point. But the point is this: you can't be mentally lazy. You can't be mentally lazy about playing the stock market. It's not something that that you can consistently succeed at without applying lots and lots and lots and lots of wisdom and technical knowledge and understanding also of finance and economics and putting it all together. You know, we're a pretty holistic swing trading group, if you will, at the moment anyway. For the next few years, that's going to be where the money is. And so you guys are in good hands, and you guys should hopefully, maybe some of you are newer, but you guys should hopefully be in pretty good shape. But don't just get into something and expect it to work out. If you don't know that all the different ranges of what could happen when you get in, you shouldn't get in the first place. You don't just get in and not have a plan. And a simple plan is not good enough. So this is all going to RJ, kind of like RJ's comment there on, I forget, was it this stock we were talking about? Yeah, AAOI. And it's funny, like while we were talking about it, it went up. That's perfect. Yeah, you know, it was like thanks, doctor. You know, I feel much better now. All right, that's $50. Here you go. Yeah. It was like, you know, it totally was. And now you're back out on the field again. You're like, let's go. It totally was. And it was like the exact, and this is exactly such a good example of how you got to think in real slow motion with swing trading. And, you know, you probably would not be remiss if you just showed up for the first 30 minutes to hour and a half of the market, went and did other things for the day, and just checked in on your phone that nothing hit an emergency level, right? But if everything's just in play, you don't need to get sketchy over something midday. The volume's not there for follow through. It's bullshit. You know, only, you know, on the rare exception is something going to be just like getting destroyed, you know, but so check on that, you know, obviously. Have alerts, have mechanical stops, and whatever it is. But then at the end of the day, wait to make your final decision. When it comes to swing trading, it's all about the opening price, the low, the high, and the closing price. That's it. That's all that should concern you. It's a candle on the daily chart. And, you know, you should also even be looking at the weekly chart to get a good example, to get a good idea of how things are sitting. Weekly charts are interesting expertise, because a consolidation on a weekly chart could be just one red candle that's an inside candle on a couple of green run candles. That would be an entire week consolidation, right? That'd be many days, 5 days, right? And then it takes off again. So a break over a red candle on a weekly chart is a big fucking deal, right? Because now it's back in motion again for a week, potentially, you know, or that whole week it's, you know, at least putting in higher lows and higher highs. So it's, you know, the end of the low end of the consolidation on a weekly basis. So reading a weekly chart can give you some insights, but you have to think of it a little bit more succinctly. Like every candle has like supreme meaning. You know, you can't look at it like this and draw a square around it and go, oh, you know, it's going to continue to, you know, paw at this region, you know, and tenderize. You know, it doesn't work that way on weekly charts. The weekly charts is the real flow. So you go over to the weekly chart on AAOI and look, that's exactly what I was talking about. You know, a weekly chart is like a super strong guiding force. So, you know, you want to get good at reading weekly charts. What the hell is going on in my portfolio? I literally have some things just flying and I don't know what they are. What is it? I didn't get down to this. It's actually the Upstart double up, I believe. I think that's the leading mover. Let me see. Well, now it is, yeah. I mean, look at that when you look at all my positions on the Scraggle graph. Let's call that this fucking Scraggle graph. Because that's what it looks like. What did you say, Randy? Fair enough. Been setting alert levels at major pivot levels. Yeah. You know what we came to an interesting conclusion of today was that if you look at the open interest aggregate number of open interests at every strike on every expiration in aggregate, there's websites for that. And you look at it like a line chart, you can see where the most vested levels are. Well, that was an interesting, observation. I think I thought about that like 15 years ago, but there just wasn't the tools to be able to even, fathom doing it. You'd have to really add up all the open interest somehow in real time. Anyway, and so we discovered that on Tesla, 280 is a real level, as strong, if not stronger than 300. I don't know what Tesla's doing today, but it was just an example. Yeah, and 260. And look at Tesla just dropping. Meanwhile, the rest of the market's fairly healthy. Energy is flatlining. How's our Gush then in that case? Where is Gush? Did we cut that? I don't even see that in my portfolio. I don't even have that. Did we get out of it? I thought we had Gush. I guess I just let it go yesterday because it wasn't performing. Where are you, Gush? Oh, there it is. Okay, I found it. I was like, what? Okay, no, we just gave back a smidge today, but actually it is up. But let's take a look at the sector. Anyway, the point there is the weekly is very strong. Pay attention to that. The daily has too much noise, but the weekly is so noiseless that your decisions become a little bit in a vacuum. But the weekly should be definitely taken into account of. That's something that I'm looking at more and more this year. I'm sort of focusing on that this year. But RJ, I don't know if you're ready for that, but you should maybe try and make yourself force it in, because it just would make you a supreme swing trader to be able to just see. It may not be noticeable on this chart yet, but maybe Abercrombie and Fitch, something that's been running for a long time. No, what's one that's been zooming? Well, Apple's an obvious example. Let's see, but it's almost too good. Apple. Then you go over to the weekly chart, and it's almost like consensus opinion. You know what I mean? It's like you really get an idea of when a level's breaking. And you can get that on a daily chart, but you get so squirmish and ratty about, you're going to just gnaw off your own fucking leg to get out of a position. And but when you go over to the weekly chart, you can see everything's fine. It's progressing. We're getting higher lows. You don't necessarily see that on a daily chart. What would be cool is if on the daily chart we could have boxes for the weekly range, sort of like on it. But the more shit you slop all over your charts, the harder they become to read. But it's info. It'd be the same as flicking over and looking at the weekly chart. See, like for instance, here on the Apple, you can see there it is. There seems to be this sort of a base range area where it stopped making highs. In the meantime, though, it kind of held lows and tightened up as time progressed. And once that price broke, weekly basis, it did fine. There was higher lows the whole way until here. just adds another dimension to your understanding of trend strength, especially if you're trying to get into something and hold it for a long time. For your runners, pretty key. Let's see. Let's take a look at Upstart. It has gone farther than its ADR. Is anybody in Upstart with me? I doubled up today. Okay, so now that it's gone past, okay, Theo, now that it's gone past ADR on one single day, you can have the decision to take off half of that position and convert to runner. However, what I like to do is I like to then watch it on the intraday and just see if it holds VWAP all day. If it can hold VWAP all day and potentially even pivots, I'm going to just let it keep going. Because sometimes some of these just do that all day run. And if that's the case, it's going to end with a huge bullish candle. It's going to get across everyone's radar. And then at least tomorrow, you're going to get some morning continuation. And then who knows? Sometimes you get a gap up and continuation. There's lots of different positive things that can happen if you give it a chance. And then you can take your 50% out at that point. If tomorrow brings just some kind of little doji thing at the top of today's bullish green candle, then that actually keeps you in for a third day. And that's, the whole reason why, you take profits between 0 and 5 days. It starts to pull back. You can say, okay, that's it. I didn't take profit on the first day. I let it settle in a little bit the second day. Third day, pulled back, boom, 50%. Let's bank it and put it in the runner. Now it's a runner. Now you don't have to worry about it. And then the third and fourth days, it goes up and up, and you're in. You're good. And you took your 50% profits, or it goes down and down and consolidates. You're fine, because either way, you're good. You took your profits, and you're running. And so that's how that goes. And for example, Upstart, this one's such a good example of how, we got in at, 36 or 3 or 7 or something in the 30s a long while ago. And then we added on yesterday on a bounce reclaim signal, I believe, or was it today? No, I think it was yesterday. Let me just take a quick look at the trades so I don't have to rely on my Alzheimer's. Today, we doubled up today. I didn't realize. And so now we've added on, So, if we take 50% here, we're just back to core, plus gains. You just keep building on it, And circumstance sometimes will trap you into a snowball in a great way. Sometimes you're going to get trapped in a snowball and you're going to be quadruple sized and it's flying. And that's just the way the trading signals put you in and kept you in. You'll see. It'll happen. We have 10 years we have 13 years. We got 12 and a half more years of this bull market. Got plenty of time. You guys can come visit me in the Bahamas sometime when you've made your big money. By the way, I'm going to be so proud of any of you who do really well. So, keep up the hard work. And that's pretty much where I get my energy from for doing this, is helping you guys. Like, I'm not doing this for the massive amounts of income from running a trading group. 95% of why I do this is to save people and to make sure that you guys enter this quest with the best financial decision making that you possibly can, because everybody gets their ass handed to them. Everybody. There's not, everybody. Bill Ackman, fucking Bill O'Neill, everybody's had their ass handed to them. There's not a single, person. But the amazing thing is If people were to listen to me enough, they might actually get their ass handed to them in paper trading, which would be the right way to go. You should probably paper trade until you blow your paper trade account up. Oh, and then you got to paper trade again until you've been a success. But like, yeah, I think one of the best things you can do. It is super duper hard to blow up an account with the 1% rule. Yes, that is so true. Yes, that's probably really made your account last a long time. What was I going to say? One thing you can do is paper trade, but have real world consequences. This is really cool. So if you do really bad on a day, you can have certain real world consequences that are things you do every day. Easy things like no dessert or only water all day. These are all things you probably, some of you just healthily do anyway. But anything that you know you like, you could cut it out that day. And then on the week, some things that you do weekly, if you do really poorly on a week, you have something that you can't do weekly. You take that off your list. Maybe it's a weekend thing. And then simultaneously, you can punish yourself as well. So you have real world punishments and real world as well as rewards too, as rewards as well, on top of the ordinary. So things that add to your ordinary and things that take away from your ordinary, because paper trading doesn't hit you then. Otherwise, it doesn't hit you. So, well, I was talking about paper trading, Randy. Maybe that's also something you're doing, but you kind of have to. If you're paper trading, you've got to have some real world consequences and some real world consequences either way. You need the dopamine hit and you need the vice versa, and that'll just help you be like sharper in the moment, because now you're sort of thinking about larger time frames of life, larger impact time frames than just, is this really worth the electricity I'm paying this computer to run on? Which is what, $1 a day. Yeah. You want real consequences. Stuff that would suck. Could be 20 push-ups, extra. It depends on how much you do, any kind of like punishment and any kind of reward that you could think of. Maybe you like to go to the movies once a week. So the punishment could be that you don't get to go, right? And the reward is that you get to go. Maybe you tie it to that, or shopping, or go out to eat, or no McDonald's, or whatever it is. You can help clean up your life a little bit with your own failures. And then suddenly, the more you fail, you're like, man, I got a 6-pack, and I'm fucking the healthiest I've ever been. I can't trade worth shit. This shit is great. Well, I can say this. I can't trade worth shit, but I got a 6-pack. Check this out. Oh, that's hilarious. All right, let's see what's going on, because my shit is doing really effing well. FNGR is flying. Remember, we got into FNGR? That's going good too. Let's look at that chart first. So Upstart obviously doing great, but let's take a look at Finger, FNGR. Wow. Just off of that pullback continuation, FNGR is doing great. It's up 7.5% today. Can somebody tell me why this little teeny bar is giving us so much return, 7.5%? I mean, this chart looks like every other chart we've ever looked at. It goes up, it pulls back, it goes up by bars. We go over to Apple, and we don't get that kind of return off of a follow-through day. So why are we getting so much return on FNGR? What makes it special? I know, Theo, you don't be scared to answer. I know you know this one. He has it. He just doesn't want to say it. No, you're right. Whatever it is. I don't know. Maybe you're not. I don't know. Maybe he's not listening or thinking. But Darius, anybody? If you need a hint, let me know. Just say hint, please. PLZ. I'm looking at some of my other stocks while you guys are typing that. What makes FNGR give us so much return compared to other stocks? I mean, it looks just like other charts that are, have nice charts. Why is this one doing so well for us? Not so well for us, but why are we getting so much ROI? Movement. Why are we getting so much movement out of it? That's a key. It's almost to the hint. All right, I've quite literally drawn the hint. Yes. The ADR is almost 20%. So when you get into something that has an ADR of 20% and it does what you'd hope for, you get that return. You get that huge return. So let's say FNGR, even retests the highs or goes to 6. This is a stock that previously went from, just on the second run, 183% in 8 bars. That's 1 week and 3 days of trading hold time. 183%. And it's just curving up now, you see. We got in yesterday on the specialized reclaim bounce reversal entry. Getting that continuation. We're getting that continuation we hope for. I don't know what it bounced off down there. Your guess is as good as mine. I guess $4 roughly. But it was the 200. Actually, there was the 200. The 200 was down here at 350. But why didn't it bounce at 350? It bounced at 4. Well, that's the way it goes. And we're getting that follow through, and that follow through just gives us padding. And if we get enough return squeaking out of it, or a nice big ADR sized percent day, then we can take our 50% off, convert to runner, and it doesn't matter what it does at that point because we're breathing easy because we've scalped out a winning trade already. All right. Let me just go through some of my stuff, some of my holdings, and then be back to the trading group. BBIG is starting to nosedive. Let's take another look at that. I have it on a runner. But yeah, it's a very low volume pullback day, so we'll just let it. APLD slamming highs. UPST coming off the highs a little bit. FNGR slamming highs, moving up. It actually becomes a green over red kind of entry day for other traders, and us included. But we actually got the signal yesterday. Sometimes the signal doesn't form right yesterday. Sometimes it doesn't form right, and so it isn't a signal. And then you get a day like today, which is green over that candle on higher volume, projected end of day higher volume. You can see that at the bottom of my chart. And then that becomes an entry. So, there is a little bit of that. There's a little bit of that luck factor, but it is statistical. But there is a little bit of that luck factor that everything forms right for you. But you're already going after setups that formed right and well. So when you're getting the signals correctly and everything's just forming right, it can't get worse as far as setups go. That doesn't mean you go whole hog or anything. Not great at multitasking. When are we going to get that TradingView ADR filter? Oh, you need to write me about that, like probably on a weekend, probably on the weekend, like Friday after the market close, because then I'll finish up the work on it. It'll just be kind of a kick in the ass reminder to me to finish up the work on it because I want it to show you, therefore, where to put your stop. I want the stop level listed right here. And the range on the day, the high and the low, like where it would project out. And then I also wanted to put ATR number underneath it. I wanted to have like this whole block, and I want it to not compete with this low, the low of the period thing. So I got to do some cleanup. I can do probably 1 hour's work on it, a solid hour, uninterrupted. All right, let's look at for myself. Anything not doing too well? KSCP. Oh, nice reclaimed tail. AUR. AUR is hanging out on launch area. Goal. Liked this, but it has given back about 60% of yesterday. GREE close to cutting already. Let's see. Oh yeah. No, I'm ready to cut mine if it's going to be like that. I agree with you. But kind of wanted to hold 650. Yeah. But that's not the low of the day. 648, 647. You're out just like that. Yeah, that's good. Good on you. I got to search for some shorts. Also, FNGR is what? The notes are there. No, they're not there. Okay. Was potentially a bigger position, and I didn't write it down. Damn it. It's probably, maybe it's on the live stream yesterday. Maybe I even put it in the alerts. FNGR is not even on our end of day alerts. Are you guys in FNGR? I thought some of you are in there with me. When did we get that? View trades. Yesterday. Must have been on call out, guys. If so, then it's on my live stream. I didn't queue it though. Queue it. I didn't alert it. Is what you're saying, I think, Theo. Is that what you mean? Yeah. What was I going to say about that? So I'm just curious what my risk size was, my R unit, because I have 800 shares. I could probably figure it out. So yesterday's entry was, I can actually reverse engineer it. See, this is why you need to make these notes. 408 yesterday. Gosh, what a great entry. Look at that. Way over here. Do I still have that on copy paste? I do. That's too funny. Yesterday at 408. Nice entry right there. And then the stop would have been the low of the day, I believe, or possibly the low of the other candle, which was 385. I do believe so. That's correct. 385, 15 plus 10 is 25 cents, probably 25 cents of risk. So I would have got 400 shares at 0.1 R, and I got 800 shares. So that's, I think it rounds out to be almost like 0.3 R. So that's what it is. All right. It's too much to have to remember and refigure out. Type that in there. There we go. I typed it in. But we did day trade it before on the hot list. Okay. We got it originally on 710. Yeah, I see that here. I pasted an alert here. That's no, and also 629, 710. Then we also got in here on 710. Well, okay, but our actual entry should have been on. Actually, it was over here on 629. What an amazing entry. It was right back here. I mean, you look at these charts and you think, wow, if only I could have got in at the bottoms of those pullbacks. Now, this is very instructional. Let's see here. By the way, why did I just say that? I've been watching all these fucking Magnus Carlsen videos. They have this thing in chess when you're in the chess community, they call certain things instructional. It's a thing. It's just think that's very instructional. They don't necessarily call it. I don't know why they don't call it educational. They call it instructional. It's because it's up to you whether or not you fucking learned anything from it. But it's this is instructional. All right. And it may be educational in your mind as a teacher, but if your students aren't getting it, then it's not. It's just instructional. And so that's it. It's up to the student to learn it or not. The instruction has been given. So anyway, this is a very instructional thing. If we get on in here on this reclaim entry, which is, you guys are so pampered, but phenomenal enough on its own. This is so obvious, and we can clearly see that vision-wise. We understand the techniques and everything, and hopefully some of you who took my classes and stuff know about the reversal signal at moving averages. But for most people, there's no way they can call the bottom of a pullback like that. But how often do we do it? Fucking all the time, right? So that's phenomenal in and of itself. Okay, so we got in there, but how on earth at that time did it qualify? Because this could have just been failure. This could have just been, we're going up and now we're selling off. It's a short end of day, end of line. In Tron speak, end of line. It could just, any pump and dump, sell off, boom, bam. Just the first thing most traders who have no idea how to, get an entry like we did there, think when they see something like that is holy hell. I think RJ maybe before this year, maybe before January, would have, if he got in this at all, he would have risked it all the way to the bottom here, $1.30 for stop to risk as any kind of overnight. Let's say you wanted to overnight this, probably would put the stop at $1.30 or $1, down here at the bottom somewhere, just for, just to be careful. So that's a huge $1.60 worth of risk. And because you're expecting, pure dumpage, potentially. You have two ways it could go. Great. And the second way, pure dumpage, right? But the thing that made it a positive was this. The move from the breakout all the way to the top of the breakout, 211%. Anytime you can get anything that moves 100% or more in less than 1 month, 20 trading days, 20 days, that is got so much baked in what do you want to call it, incredibleness, that it's not fly by night. Obviously that wouldn't work, but it's been measured and consistent. Obviously that wouldn't work if it was just one day and it was an 800% pop. See what I'm saying? Yeah, mojo. It has the repeated, it did it in a measured manner, right? You don't want something that it qualifies if it pops up and then puts in a big, huge green day. Yeah, but it's unproven still. What do we call it? A guinea pig day, right? Do you want to be the guinea pig? But this is proven. This is fully proven. It did 211%, started to pull back. I had been watching it since it did this bottom breakout, right around here. Didn't want to get in there. Was hoping it would bounce and pull back right there, and then we can get in, potentially. but it didn't. So we got it on the pullback. So that's what qualified it. That's the instructional moment. How can you know? It's not even trending. It's one line. That's not a trend. It's not 4 points to a trend. It's one. Okay? It's only one leg. One leg does not make a trend because one leg can do this. One leg does not make an uptrend. And one other, and reversing of price does not make an uptrend. But what makes it a very good prospect is this really smooth action all the way through the whole move for multiple days. And that could have been 3 days. Okay. But you need some measured consistency to rely on. And then the fact that from the whole move itself, even from breakout, I measured, it's actually more than that from the lowest point, but which you can do, you can measure it either way, is 211%. It's beyond the 100% cutoff on this particular stock. So it becomes, when that happens, by the way, and it makes such a huge move like that, and the ADR obviously 20%, fantastic. When it makes a huge move like that, and look at the volume compared to prior volume, that's another key looking back. So this has all the signs you're looking for, because it's not just that it's high volume. The real point here is like, what is the real point that all of this makes all together in one? Is finger motion is experiencing is a new stock. This is like an IPO. Like whatever finger was before is irrelevant now. It doesn't trade like that anymore. You see? So when they have these huge catalyst moves, it's a change in everything. It's a change in everybody who cares about it. It's a change in the business. It's positive change. It's incredible change. It's not a chart move anymore. It's not that it just got over this point here. Previous resistance doesn't fucking matter anymore, whatever it is. This is an IPO now, you see. So then we got this, kind of green day, just barely a reclaim. And actually, at the time we got in, we probably got in here, and it was looking just absolutely idyllic. But then it pulled back by the close, and luckily the next day it did continue, like it indicated. This is what the candle would have looked like at that time, which is far more qualifying. But by the end of the day, it was almost a doji. But you're already in, and it's sort of like across your fingers. The demand was there. And the stock certainly qualifies. So you don't have to put your stop way down there. You can just put your stop at the bottom of that candle, 250. Finger stop. Look at that. I was just going to say, I wonder what the stop was. Stop 250. That was the low of the candle. And then it proceeded to make, what did we get out of that? We got a huge move from there. It proceeded to do 134% in 6 trading days. 134% on 6 trading days. These are returns that options traders dream of. To be getting this out of shares where you have full control and granularity and totally linear delta and no Greeks to deal with or expirations. This is a dream. So we did the class like a month or 2 or 3 ago about, how to make sure you can find these things and put them on your hot list. But that's what it is. It's the big moves in short amount of time. But you're looking for beauties like this, things with nice consistent movement. Okay? And it's not going to be, gorgeously consistent like an Apple, because these things are going crazy. But this kind of consistency during craziness, that's predictable. It's like big wave surfing. It's the difference between going out when there's a fucking storm and you're getting the same amount of volatility as when there's just some big ass waves out there. You know, one is surfable and the other one will kill you. All right, let's go back into the group. I got to do a bunch of work on my portfolio here, and then probably have some errands to run as well. See you in the group, guys. Bye bye. Thank you. Thank you, guys. Yeah, see you in the cord.